morning. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet D'Souza.
Good morning, Navneet. I'm Agam Akil. The top headlines. Indian markets open lower as Nifty trades below the 10,750 mark. Financials and realty stocks weigh India VIX declines. And the trend in NIIT Technologies and KPI Technologies continues as open interest surges for both these companies. And OMCs are the top losers on the Nifty after the oil retails reduce fuel prices for the 10th straight day. Reliance Industries may be preparing to list its consumer business, with Chairman Mukesh Ambani saying they have crossed a meaningful threshold. An interim finance minister, Piyush Goyal, will meet PSU bank chiefs today. On the agenda is a consolidation roadmap of state-owned banks.
All right, those are the top headlines at this hour, but let's also tell you what's happening in the futures and options market. After 2 days of gains, we're seeing some bit of profit booking in the market, but let me tell you, Nifty is off the opening lows, at least what we saw. So right now down only about 25 points. Bank Nifty is the one which has been under pressure since the morning trade. That's down nearly 150 points in trade. Important to highlight that the 10-year bond yields today touched the mark of 8% for the first time since December 2014. So that could have some bit of pressure going for the PSU banking space. But pull up the futures actually for the Nifty as well as Bank Nifty. Let's see where they're trading currently. So the discount continues for Nifty futures of about 12 points. Pull up the Bank Nifty futures and let's see what's happening there. Last time it rebounded from its 20-day moving average. So it's trading way above that mark. And the premium there is just about 4 to 5 points. But most importantly, markets being trending lower today. India VIX seems to have corrected very sharply, and that's trading around the mark of 12.3. It's actually off the day's low. At one point of time, the level was just about 12, so 4% lower for India VIX, but some bit of strength seen in the broader markets. Pull up the Nifty mid cap and the small cap index. They've seen some bit of recovery from the opening lows that we've seen in the morning session. The mid cap as well as the small cap index, both of them are trading in the positive territory. But let's quickly tell you in terms of option strike what's happening. 10,700 call as well as the 10,800 call. Both of them have seen open interest addition in the opening session today. So between 2 to 2.5 lakh shares have been added on both these strikes. Whereas on the put side, the 10,600, which is sitting with maximum open interest, continues to see more build up. So 1.2 lakh shares in the opening session has been added there. And even the 10,500 strike has seen addition of 1 lakh shares. And if one were to see the FI data in the index option space, it clearly told you the rally that one saw in the last two session was on account of short covering. There was a lot of unwinding of the short positions seen, on the call short side, where almost over 20,000 contracts were unwound.
Well, Navneet, once again, in yet another session, we have NIIT Technologies and KPI Technologies right at the top of the gainers and surge in open interest. But Strides Shasun makes that list. The underlying is up as much as 10%, another 13% added to open interest, and Tata LC from the IT space advancing, now well above the mark of 1,200. In fact, 1,240 right now, and another 12% added in open interest as well. Ajanta Pharma also sees a surge in OI even as the underlying advances by as much as 6%. On the whole, I'm going to keep an eye on some of these pharma companies as well as the technology companies. Well, actually, if you go to see, all these companies are beneficiaries of the weakening rupee, and that is possibly one of the reasons why we are looking at a surge in their underlying and perhaps an increase in open interest. We're going to wait and watch whether or not there is some profit booking towards the end of the day. But for now, all these companies looking good.
Okay, so watch out for the IT and pharma pack. In fact, both the sectoral indices are also bucking the trend in today's session. Nifty IT and Nifty Pharma have been trading in the positive territory. All right, before we get our guest on the show, here's a reminder for you all. If you have any queries in the futures and options market, please call us now on 022-4540-4141. Write to us on Twitter, Facebook, and also on YouTube. And you can also add the AskPQ hashtag. Let's welcome then our F&O experts for the day. Thakkar will be joining us in a while, but currently joining us is Navneet Daga of IIFL Wealth. Hi Navneet, good morning to you and thanks a lot for joining us today once again on Bloomberg Quint. How are you reading the data? We did see good recovery in the last two sessions, but there is some bit of weakness which has once again crept in for the frontline indices. Are you looking to take any sort of trade on Nifty or on Bank Nifty on these corrections?
Hey, good morning. Look, the data clearly shows that there was a lot of there was a lot of unwinding from the call and the call side from the FI side as well as on the domestic front as well. So we have seen this spurt of almost 200 points in the last two trading sessions, and once after the RBI policy event, it's kind of looking like that a lot of shorts got unwinded and relief rally kind of a thing which was played out. There was indications that the VIX was not moving up even in the market was falling down and the mid cap were crashing. In fact, if you recall in the last conversation also, we said that the broader markets are not participating. It's not looking very healthy on the overall market front. But the sideways trend on the index will continue to our understanding because it's absolutely range is what we are playing on. We're looking at the VIX index and looking at the build-up. We don't have any major events now. It's looking like that the sideways consolidation will keep on continuing. Similarly, on the bank nifty also, the kind of a triple top formation that we have seen in the private bank index, it's giving me a feeling that there would be a hurdle in that zone of 27,000 on the higher side. We have almost reverted thrice from that levels on the 27,000 on the bank nifty. Yesterday also we are somewhere higher 26,800. So it's giving me a feeling that again that range bound trade when on the headline indices might continue even in the bank nifty. I'll be play for a short strangle on bank nifty for the current peak as well.
Okay, well, I'm told we have Jay Thakkar with us from Anand Rathi joining us as well. Good morning, Jay. Tell us, how are you reading the variables right now and what's your view on the benchmark indices?
Hi, good morning to all of you. Well, see, I think that the indices, mainly Bank Nifty and the Nifty, are still within the range, and the range is quite broader. I would say from 10,550 to 10,900, 950. That's 400 points range. Now we are within this 400 points range, and exactly in the middle at 750. Now what to do? So I think that one should buy this dip which we have seen because after a 2 days strong rally, I think the way the index has reversed from the lower end of the range, it is quite high probability that it inches towards the upper end of the range, that is 10,900 to 950. So my idea or my view is that one should buy into this dip, and the target on the upside would be the same, the upper end of the range. However, on the lower side, one can place a stop loss at 10,600. As far as the bank nifty is concerned, now that is into 800 points range of 26,200 to 27,000. I do believe that once this consolidation is over, there will be an upward breakout because the momentum indicators are showing sign of clear reversal from sell to buy from the zero reference line. So the same idea on bank nifty, one should buy on dips, keeping a stop loss at 26,200 because it is trading near the lower end of the range, targeting not 27,000 on the immediate basis, but then 26,600, 26,700 more, mostly at least in a day or two.
Okay, that's the view coming in on Bank Nifty. Let's tell you what sort of option strategies can be deployed in today's trading session. So shifting focus to the options corner, Navneet Daga has a short strangle strategy on Bank Nifty. But before we proceed, let's first take a look at what this strategy means. A short strangle is when one sells an out-of-the-money call and an out-of-the-money put in anticipation of decrease in volatility. Well, the strategy becomes profitable when volatility decreases followed by contraction in the option premium. Navneet, over to you. Take us through your short strangle strategy on Nifty Bank today.
Look, the way we discuss the kind of data that we're getting and the kind of trade that we're setting up, it's looking like a consolidation, a lot more consolidation rather than breakdown trade. So my strategy is simple, just still the out of money options to eat up the premium. There is almost 50 odd points available as a theta value because we are playing with the weekly expiry. So one look to sell at 26,000 put option on the lower side on Bank Nifty and simultaneously sell 26,600 calls on the higher side. The range that you're playing is basically 25,800 on the lower side and 26,800 on the higher side. These are both the upper bands and lower bands on the Bank Nifty. So the strategy can be done with an inflow of almost 200 points. And one keep a strict stop loss, the spreads widens towards 280 points because Bank Nifty, as we know, it's quite volatile. One need to keep a very strict stop losses when you are doing short triangles or short strategies. I'm expecting this range to summarize and the Bank Nifty to trade within the range for the next 4 or 5 trading sessions. And expecting the premium inflow to shrink down towards as low as somewhere near to 50 points. That's where one should look to book profit in this strategy.
Okay, so Jay, you did speak about buying the Nifty right now with keeping a stop loss at around 10,600. But what would you do with your options then?
See, as I said, that still it is trading within the range, and I'm expecting it will bounce towards or inch towards the upper end of the range. But then, when it surpasses that range, we can call it a breakout. Till then, if it doesn't happen, so then it has a risk of a downside, right? So to minimize that risk, it's a bull call spread strategy which I would recommend right now. Buying Nifty 10,800 calls, which is the nearmost to the spot levels, and I would say selling one 10,950 call option, and in that case I would say which is trading somewhere at a difference of 50 points, roughly say if 10,800 is trading at 78 approximately, one can buy that and sell 10,950 at 28, so the difference is 50 points, hence that is the maximum risk of 3,750. The maximum gain, however, I would say on the upside would be 100 points, so the risk reward is 1:2. So if the index closes at say 10,950, right, then there will be a gain of 100 points as the cost is 50. So I think a decent risk reward from the beginning of the expiry, I would say, and the probability of winning is also quite high, I believe.
Okay, so bull call spread on Nifty is what Jay Thakkar is advising to deploy in terms of Nifty option strategy. But I think we've got Navneet, who has a stock option strategy also going today, and that's a bull call spread once again on Tata Steel. Let me tell you what a bull call spread is actually. Well, that's a spread employed when one expects a moderate up move in a security, and in this strategy, a call option of a certain strike is purchased and a call option of a higher strike is simultaneously sold. Navneet, take us through your strategy on Tata Steel and what are the levels or the option strikes that you're advising?
Firstly, the metals overall, within that metals, the steel pack has been warming up again, and it's giving me signs that somewhat the near-term bottom formation has happened. If I look out the Tata Steel yesterday's move, it was almost up on 3.5%, and there was across the board unwinding on the call side. The maximum build-up was seen as 600 levels on the calls, and that strike got unwinded when the stock started to trade above that. And today also we've seen some kind of a mild positive breakout on the higher side, as well as somewhat build-up in the long position was also seen. So the strategy is simple: just buy at the money call option, sell OTM call option of 640. So one can buy a 600 call option and sell 640 call options. And the current spread is happening in the range of almost 11.5 to 12.5 points. So one can initiate the strategy at this current level. I'm expecting the stock to move towards 630 or levels. If that happens, my target price of the spread is somewhere into 30 points. And I will keep the strict stop loss on the lower side. If the spread doesn't materialize, the stock doesn't move up, one can keep a strict stop loss at the levels of 5 on the total spread.
Okay, so well, there you have it, a bull call spread on Tata Steel. But Jay, what are the stocks that you are looking to dabble into in these markets?
Well, see, that's one sector which I called for a bottom last time in your show as well, and I said that it's a bottom and a very high probable bottom, because the kind of pattern which we see or which I have seen in that index coming is has a very high probability of reversal. And since this time around, it has formed at the lower end of the range. I'm talking about the Nifty Pharma now. So since it has formed at the lower end of the range, I think the probability of a reversal on the upside is quite high. It still has not broken out, but I'm anticipating the same. And Pharma, I've been calling for a bottom. 8,000 should be the stop loss. 10,500 should be the target of Nifty Pharma, trading at around 8,500 right now. So if you see the risk reward is 500 points downside, 2,000 points upside is 1:4 risk reward, which I'm saying. However, for the short term, the kind of momentum which today has taken place in the pharma stocks, I would say Glenmark has again taken off its previous swing high, so 575 is the target, stop loss is 539. Lupin has taken off its trend line resistance, and the stock has clearly broken out with a buy crossover in its indicators. In fact, both the stocks have clearly given a buy crossover, and if you see the monthly charts, both these stocks or weekly charts, you will find that both these stocks are providing a positive divergence since May-June 2017. So it's 1 year positive divergence, and if a breakout comes in this stock, you ask anyone technically, a stock with a positive 1 year of divergence and finally a breakout, what can happen? However, for the short term, one can buy Lupin for a target of 805 with a stop loss of 769.
Okay, those are some long strategies on pharma counters. But Navneet, I think you've also got a strategy on TVS Motors. Are you looking to go short on it?
The idea is to find out the stocks which are not participating in the rally, and I've identified one stock, which is TVS Motors. We've seen the stock has been continuously grinding lower from almost 700 levels to almost 570. The stock is not showing any major strength on the higher side. It's facing a lot of resistance, and every rally is getting used to go short on that. So the smart money is already being on the short side of the stock. We are seeing some kind of a mild short build up as well. So to my understanding, the momentum on the downside would continue. One can look to initiate a fresh sell over here in this current market price of 572 to 573 range. And I'm expecting almost 4 to 5% downside from here on as well. So 550 should be initial target with the stop loss on the higher side of 582.
All right, so that's the view on TVS Motor Company. I'm getting just a bit wary of addressing NIIT Technologies and KPI Technologies almost every single day, but it still shows up in our list in terms of the biggest gainers in open interest. So I'm going to address it again today. Navneet, I'm going to come back to you on this one. How are you viewing trade on NIIT Technologies? Has it resumed its up move, its long-term up move? In that case, so what would you do and how would you deal with this one? And perhaps if you're also tracking KPI Technologies, the move is not unlike NIIT Technologies. What's the view here on both these counters right now?
Well, look, these two stocks, both of them, and in fact, mid-cap IT space, all have seen the kind of a big swings in the last week or so. We have seen almost NIIT Tech going below 1,000 odd level and then bouncing back almost 7 to 8% from that levels. So, to my understanding, for a stock to resume its long-term uptrend, it needs to close above 1100 levels. If it is not able to maintain above that level, in fact, I used to go short on this stocks because these are behaving exactly the way the rupee is behaving. Once we have seen the INR depreciating today, we've seen some kind of a negative traction started to come into the mid-cap IT space. So I would not be comfortable in this kind of a trade. It's looking likely that the kind of a move that we have seen last week, we might see that whipsaw swings continue in the stocks. For the long-term uptrend, one need to please closely watch on the 1100 levels to be crossed on NIIT Tech, and similarly on KPIT, one need to see if the stock is starting to sustain above the levels of 280 or not. If it's not, it's a risk reward will still be favorable to be on the sell side.
Okay, that's KPI Tech. In fact, most of the technology stocks are buzzing in today's trading session. Let's move on and address some viewer queries. I think we've got a caller online. Suresh Matthew is there with us. Hi, Suresh. Good morning. Tell us what's your query on.
Good morning. Yeah, I bought today this weekly Bank Nifty option, 26,500 PE. So I bought it 278 average, 5 lots. So just want your view. Can I hold or can I exit?
Okay, so Suresh has bought 5 lots of Bank Nifty 26,500 put strike for the next week's expiry.
It's currently trading at around 270.
Yeah, so it's just around the same levels, or 278 is his average. 252 actually, it's fallen to levels of 254.
No, but I think this is the 28th June expiry.
All right, so we're looking at the next week expiry,
so that's the 14th
which
June
is
one,
the 14th June.
That's going in at around 270.
Okay, so it's just around the same, premium what Suresh has paid. Navneet, I'll come to you. Would you suggest him to hold on to this position till Thursday?
Beg your pardon, which strike that the gentleman has bought?
He's bought the 26,500 put strike of Bank Nifty next week's expiry.
Okay. Look, the Bank Nifty is giving a lot of volatile swings. To my understanding, it will find a lot of support in that range of 26,200 and 26,000 range. It is not breaking down below that easily and either it's able to surpass on the higher side. So to my understanding, if it started to, one should keep a watch on if the levels of 26,500 has been crossed on the higher side, one should look to exit. One can keep on holding on to the trade because currently the setup suggests that one more down leg is possible on the lower side. The way I was explaining the private bank setup is being on the short side. So to my understanding, if the future started to cross about 26,500, you should trail stop loss and close your positions. And until unless it's trading below that, one need to keep on hold on this position. I believe 26,100 is possible in this series, in this next weekly series.
All right, so there you have it. That's the view on the puts that Suresh Matthew has bought right now. And of course, Suresh, you have to keep in mind that time decay will be against you. And that said, of course, I'm sure you know the rest of the risks. But I'm going to move on to the next query. And we have on Facebook from Shivu SB. And he says that he's bought the 920 Mahindra & Mahindra call at 21 and United Spirits 3,400 call at 84. His question is, well, what can be done with these? So can we take a look at M&M first? Let's address M&M's 920 call first. It's currently trading at around 20. Of course, he's bought it at 21, so he isn't making too much of a loss currently. Can we take a look at the M&M futures as well and see where they're currently trading at and what's going on with the futures, just to give an idea of okay, there you have it. That's 917. The underlying is at around 914, and open interest not too much to speak for. Jay, coming back to you, how are you viewing trade on M&M right now? What's going on?
See, I'll say that M&M has been quite strong in past couple of series, and I think the kind of breakout which we have seen coming in this stock day before yesterday, from high levels we did see some selling pressure happening in this stock. But then I would say mostly this stock is trading within that range of say 930 on the upside to say 900 on the lower side. Till 900 levels on the lower side are not broken, I would say the overall trend for the stock will remain positive. It might just take a few more days. So what will happen is that there will be some erosion of the premium from, since he has bought it at 21, is trading at 18, so it might just slip to say 12, 13 as well, and then eventually when there will be a breakout on the upside, he would get less amount of gain. But then I would say the gain will happen. The probability is quite higher. It's just that 900 on a closing basis, one should keep a stop loss at on the spot. If it breaks those levels and closes below those levels, because that has acted as a crucial support, if below those levels, I would say the probability of this call option of 920 going to zero is quite high. So at 900, if it breaks that, whatever the premium is, just exit, else stay on. I would say once it takes off the levels of 930, he might gain good on the upside, and 940, 45 is the target. So eventually what will happen is, even if it expires around 940, 45, then the value would be somewhere around say 20 to 25. So the probability of his making some money is high, and recovering his loss is also high.
Okay, now let's sorry, I think there was another part of the question.
Sure, go ahead.
Take that up on United Spirits. Can we take a look at United Spirits as well, the 3,400 call? Yeah, that's currently at 85, and he's bought it at 84. So again, around the same levels, and it's currently trading at around 3,350. So only 50 points away from that call going into the money. That could be a positive as well, considering United Spirits is seeing some strength. Navneet, can I take you up on United Spirits and what you would advise Shivu to do with his position right now?
Look, the stock after a result last week or so, we are seeing the stock finding a lot of traction, and the level on the lower side has been just giving me a feeling that somewhat the bottom formation has happened in the range of 3,200 range on the lower side. But however, I'm not very since I'm not very overall bullish on the stock. It's looking likely that on the higher side also it started to face a lot of supply zone in that 3,390 to 3,450 zone. So to my understanding, if you're getting into that zone of 3,390, which is roughly 1.5% away from the current market price, one should look to exit in this position. It's the merit. It doesn't merit that one should chase the stock on the higher side. It's look likely that the higher range of 3,450 would not be taken out in this expiry, and similarly on the lower side, 3,200 would be protected. So it would be in the broader range in the lower setup.
Okay, that's the call on United Spirits. Let's just pull up the Nifty Pharma Index. Remember, Thakkar was quite bullish on it, and all the pharma stocks have risen quite sharply. So Nifty also, Sun Pharma is your top gainer, Dr. Reddy, Lupin, Cipla. But let me tell you, the one counter which has moved up really high, and it's one of the top F&O gainers, is Strides Shasun. It's been really weak in the last 8 sessions at least, so it's snapped the 8-day losing streak, currently sitting with gains of almost 10 to 11%. Since we've taken Jay's view on Pharma Pack, Navneet, I'll come back to you. Any thoughts on Strides Shasun, which has gone up quite sharply, and open interest too has gone up by almost 15%?
Right. Look, the stock has seen a tremendous amount of build-up in today's session on the future side, as well as I was looking at the call side as well. If you look at the 400 strike price call, that has added almost near to 100% of open interest in today in the morning session itself. So it seems that something is cooking in this stock and an overall pharma trend. So since it's been quite volatile, I'll use the spreads to trade on in such a stock whereby you'll not be hit by at least by the Vega trade, and similarly if the stock turns down because it's been so volatile in nature. So one can look to buy a 380 call option in the current setup for Star, and simultaneously one can sell an upper strike call option of at least 420 odd range. The spread would be happening in the range of somewhere near to 13 to 14 points. To my understanding, there's a decent risk reward is almost 1:3. So one can play along with the spread rather than trading directly in the futures.
All right, that's the view on Strides Shasun. I think, okay, so I'm going to just address maybe one or two other stocks which are also buzzing in trade today. Of course, United Breweries is also one of them. We have addressed United Spirits, but United Breweries was one which was also, it's seen a lot of traction over the previous couple of days, and it's currently also advancing by as much as 0.3%. Open interest accumulating another 10% right now. Jay, what's the view on United Breweries right now? Any caution playing out here, or would you continue to be bullish when it comes to United Breweries?
Well, see, as far as the United Breweries is concerned, I would say staying long with this stock makes sense, because this stock has been trending quite higher, and is trading well with a positive momentum, positive divergence, good set of the stock is trading well above short term as well as medium and long term averages. There is nothing as such wherein I would say one should be bearish about. UBL has performed quite well, and it continues to do so. It's just that the momentum in the short term might have gone sideways. The reason is that this stock has formed multiple resistances around 1250 is what I see. So the conviction of the traders, investors will be higher now about 1250. I think once it takes off those levels, I think there will be a broader or bigger breakout. And those who are already holding long, for them I would say positionally 1100 is a very good support. For the short term traders, I would say 1175 is a very good support. So the traders and the positional traders and the short term traders maintain their stop losses and continue holding long. I think the probability of breakout of 1250 is high. Those who are very high, highly I would say risk averse might just book profits out there, buy again about 1250, because about 1250 I think there would be a minimum move for almost 200 to 250 points.
Okay, United Breweries saw fresh longs in yesterday's session, but I guess the focus today will be the pharma pack. Almost 9 out of 10 F&O stocks among the gaining side are the pharma stocks. Before we wrap, just want to take a final view on not couple of stocks, but anything which is popping up on our experts window right now. So Jay, I'll come back to you. Anything interesting that's popping up on your screen you would like to share with our viewers?
Sure, no, let's see. I would like to reiterate the same thing. Why I would like to reiterate the reason is that I am 100% convinced on the same, on Nifty Pharma, and I'm saying this with very high conviction that the probability of Nifty Pharma having bottomed out is quite high. And see, most of the things I've already said. So what I would like to say additionally, Navneet, would be something of this show, which we are covering mostly the F&O part. But then to the viewers, I would say if someone is not, would not like to dare to get into the pharma stocks on the F&O front, if they are, finding that there is a risk of anything happening overnight, in the US or by the US FDA, and there can be something wherein they have to sell at quite a huge loss, then what they can do is either trade in options, buy call options, and either have the option strategies of the bull call spread and such things, wherein we already discussed, and you also very well explain to them what bull call spread is, so they can take the advantage of the same. And the final thing I would say, it would be getting into the MFs, mutual funds, and there are two mutual funds which I have identified which are pharma focused, and they are Reliance Pharma Fund and SBI Healthcare Opportunities Fund. So if nothing, then at least get some or pump some money into these funds, if not into pharma directly in F&O options or cash, then get some fund into these two funds, so that you can take the advantage of the bounce which I am expecting of at least 30-35% in this calendar year, or you say of financial year.
All right, well, that's Jay Thakkar laying emphasis on the fact that the pharma index and a lot of these pharma stocks could have possibly bottomed out, but we'd love to chat a little more about the futures and options space, but we've completely run out of time. So I'm going to thank both our experts, Jay Thakkar as well as Navneet, for joining us and giving us taking us through their strategies as well as solving some of our viewer queries. And with that, it's a wrap in this edition of the F&O Show. But lots more lined up, so stay tuned in the Bloomberg.